As we have observed in the previous article, that mutual fund industry has shown a robust growth even in market correction, and in the previous article it was mentioned that for an average of last 11 months it was 38,000 crore, which has got more than 20% improvement in the last month of April and poised around 45,000 crore. The same was reflected in year 2025. The details was shown around the month end of December. The article consists mutual fund industry on growth for third year of over 20% AUM, which has proven correct. The mutual fund industry in the year 2025 beginning, AUM stood at 66.9 trillion and at the end it has ballooned 80.8 trillion, a growth of 21%. Asset managed by mutual fund scheme had grown 27% in year 2023 and 32% in year 2024. The strong growth persisted in 25 by a growth of 21%. Despite the industry's key tailwind, the equity market turning unfavorable in the year 2025. The market saw a correction towards the end of 2024 and in early 2025 and are yet to decisively move past the highs touched in this month of September 2024. The small cap segment, which had seen the highest investor interest through mutual fund in 2023 and 24, ended the year in red. 2025 was another strong year for the Indian mutual fund industry, driven by transformation, inclusivity, and innovation. AUM of the industry has shown and grown 80.8 trillion. Retail Systematic Investment Plan (SIP) inflows crossed 29,000 crore, which we have observed in previous article. It has crossed 38,000 crore average for the 11 month and more in the April. So far, it has observed in the month of March, it has crossed to 40,000 crore. Not 40,000 crore, but 45,000 crore. 38,000 crore plus 20%. Even as global headwinds and persistent selling by the FPIs, foreign institutional investors, tested the equity market. Deputy Managing Director Mr. D.P. Singh has shown the same sentiment. And Joint Chief Executive Officer SBI Mutual Fund Mr. D.P. Singh has shown the same sentiment. Now, the growth in AUM last year, unlikely in most other high growth years, was largely driven by inflows. As of November 2025, total inflow into mutual fund scheme in 2025 stood at 8.5 trillion, over 2% higher than the all-time high net inflows seen in year 2024. Mutual fund AUM growth depends on two factors. One, the quantum of inflows, and two, the outflows and the change in the value of the underlying assets of the scheme. Robust inflows in year 2025 were supported by consistent SIP contributions and a surge in investment into debt funds and gold and silver schemes. Hybrid funds, especially multi-asset funds, also witnessed a rise in investor interest. SIP inflows crossed 3 trillion for the first time in year 2025 as investors increasingly relied on the staggered investment route amid market volatility. This came despite a decline in the number of active accounts. There was a huge number of accounts reduced. Even then, the inflow of fund had surpassed. So, though there was a public panic, but more people has trusted in SIP. Active accounts had seen a sharp drop in the first few months of the year due to the market correction and a one-time data cleanup exercise by the fund houses. Mutual fund schemes tracking gold and silver prices were among those garnering the highest inflows. Gold and silver exchange traded funds together amassed over 50,000 crore until November 2025. Debt funds also saw a gush in inflows, largely due to increase in institutional investment in liquid and other short-term schemes. The jump in inflows into non-equity schemes more than offset the decline in lump sum inflows into equity schemes in 2025. As of October 25, while lump sum inflows into active equity schemes were 2 trillion lower than in 2024, SIP investments in active equity schemes were already 3% higher at 2.3 trillion. There is a good and expected positive return in coming years in mutual fund industry and share market